Well, hello. Today I wanted to take a brief moment to pull up my Thinkorswim account, find a situation to where a long call will work, and actually place one. We'll talk about a couple of different ways to do it, choices we can make when it comes to the expiration cycle, management styles, so on and so forth. So, folks, let's get into it. Make sure you know what you're doing before you do it. Take these classes, like this class would be a good one as well. Understand your platform. I'm going to be doing it on Thinkorswim today, but understand IB. Or any platform you're trading on, make sure you take responsibility for the outcome. That's why we demo trade and have courses to take over and over and over again. So let's get right into, there it is, my Thinkorswim account. Now I went ahead and saved us a bunch of time. I took a top-down approach and I decided that I'd stop at the sectors. Right, guys, we look at the markets, the sectors, and then stocks inside the sector. But I found a sector that I liked. This is the utility sector, XLU. It's a Spiders ETF. I thought it was really cool because it's been emerging. It's shown a lot of strength, not only in the sector itself, but individual stocks. What I did like about it, let's get specific to, let me get my red pen out. Things that I liked in the chart pattern. It has a pretty good resistance area at about 64. So guys, yes, I'm building this. We're doing this lab early. And what I mean by early, and you should be doing this with all of your trades, find good setups even if they haven't triggered yet. Now, folks, an ideal trigger, and let me draw this tight, a little fat kind of a line here, would be around the 64 mark. However, I'm actually pretty comfortable if it was to break above this previous pivot point in this situation. I'm fine with that because, hey, it's coming from a higher pivot low. Here's our pivot lows, right? Now this thing has been in a range for quite a while. Let me draw some double lines to show you this range. It dipped a little bit lower back here. You could see, if you guys are taking a look at the current markets at this time, they all did this. But it's done pretty good in that it had this nice pullback, confirmation of a bull pullback, and actually confirmed to the upside. So if I can erase all these, if you guys did the trade on this based on the bull pullback confirmation of this candle with the target up here, you're almost at max gain, right? It took 2 or 3 days since your entry, right? We understand that. We're going to have to come up with a time frame when it comes to our target. We also need to find a target, don't we, folks? So this is kind of a breakdown of what I saw on this chart. If you guys want to refresh that, go to your high base breakouts. That would be a good one, ascending triangle pattern breakout, because technically this could be a very tight ascending triangle pattern to this point. One thing that I did like when it comes to the secondary indicators, if you guys like to use those, I like the fact that they're all starting to stack up. I see the 20s above the rest of them. I see a crossover about the 50 and the 200s about to cross. So it's all good things. The volume is it's decent, so on and so forth. So there's the breakdown of the chart. Now let's get to the fun stuff, because we need to break down the pattern itself, and I'm going to do this a little bit offline here, guys. I'm going to see if I can't pull up my browser. Actually, let's just do this together. Let's pull up our browser. I'm going to go to our website here, and I'm going to get the long call PDF. This might be actually really cool if it comes to a little bit of a refresher course on where to find these things, right, guys? Now, I did have a little bit of an issue with my internet a second ago, so let's see if I can't get it to behave. It looks like it's going to. So here we are on our website. Let's take a look at our dashboard, and let's go ahead. It's in the Trading Center here. Once this decides to load, we're a little slow because we're streaming this class. And I'm going to go to the directional options course right here. Hopefully you guys can see me. I'm going to drop this bad boy down. I'm going to click on Directional Options 1, Required Videos and Test, which is the long call and put class. And below these courses, you're going to see our fillable PDFs. I'm just going to go ahead and click on the long call with the Maverick setup. I could do a blank one if we wanted to, but let's go ahead and start at this. It might be a little bit more fun. Now let's see if it wants to load. It doesn't seem like it really likes me today. But it'd be kind of neat to go step by step to actually use this and fill it out when it comes to what we're seeing in XLE itself. All right, here we are. So first thing I'm going to do is I'm going to type in the ticker symbol, XLE. And today's date, yeah, we're going to date this class. Where are we at? The March 25th. Let's go 3/25/2021, right? And the chart setup, folks, I'm going to call it an ascending triangle pattern. You could do a high base as well, but I like that little bit of a elbow that we saw a few days back. So this is definitely a +2, +3 outlook because I really want to target this pretty aggressively. Let's go ahead and let's do our test. Our time frame, entry, stop, and target. Let's start there. That might be the best place to go because we need to analyze this chart and see what we can expect out of it in a certain time. Now, guys, you notice that I do have my ATR down here, and it looks like this thing moves about $1 a day, 99 cents. So we'll take that in consideration. One thing that I do like to do is Fibonacci's. They're fun when it comes to extensions, when it comes to something that's moved and pulled back and is at a resistance area, in this case, a high base or a setting triangle pattern. It's kind of cool to give me a line in the sand. I like to use that. I will also, and I'm fine with maybe targeting previous areas of resistance as well. But for fun, let's go ahead and build this bad boy up with using some Fibos. So the first thing we need to talk about is our entry. And I'm going to go ahead and just be a little tight with this. I'm going to say, okay, if we can get above this area, now I'm going to get off my pin and get to my cursor because what I love about this software is if I put my cursor at a certain area, it gives me a price, $63.50. So I'm immediately going to jump back over to my, if I can find it here, to my PDF and put my entry at, what did I say, $63.50. Okay, let's move on back to our Thinkorswim. Next thing I'm going to do is find the target. Now I'm going to snap my Fibos. Down here, guys, you get your drawing settings. This is the easiest way to grab it. You can also go up here where it says drawing settings and get to your drawing tools from this area as well. Now what I'm looking for is we've got a Fibonacci retracement, but then we also have a Fibonacci extension, and that's what I want to use. So I'm going to highlight this, and I'm going to start from this bottom pivot. Just click once, drag it up to the end of the move, click it again, and then pull back down to the base of the pullback and drop it. Now what this does is it's going to give me, based on the move to the corrective action, the expectations of Fibonacci extensions past that. You can see 100% is where I usually shoot. So my target with my Fibonacci extensions would be $66.40, right? Now you guys could do 50%. You could have it retrace back up as the bull pullback. Remember, $63.70 would be great if you got into this as a bull pullback. Still a good trade. And so on and so forth. Maybe I do a 61.8, a 78.6. I like to do 100%. That's kind of my personal outlook on that. So I'm going to go back to my chart here and type in 66.40. I believe that's what it was, which is my target. All right, then I'm also going to need a stop. So protective stop for me is going to be easy. It is at support. It always will be. And this is going to be tough because this is going to keep it a little bit wide. My risk reward is not going to be as great, but I'm going to give this, since it's a call, a straight call, as much room as I need. First of all, let me get rid of these. Just right click here and get to clear my drawing set. Say yes. Okay, so we have that out there. I'll go ahead and just draw a line right about, oh, sorry folks, that's not what I want to do. I wanted to use my pen. Get over here, and so you guys have an idea of what we're talking about. 66.40 was about right there. Entries 66 or 63.50, which is about there. And I'm going to go ahead and put my stop, folks, below this pivot point at this area. Let's go ahead and call it. Let's call it 61.50, just to keep round numbers. So let me get back to my. I put in my stop here at 61.50. All right. Okay. So now time frame. Time frame. That's something that we know. This thing moves about $1 a day. with a breakout there. Geez, let's see, 1, 2, 3, $4, or excuse me, 4 days to get from for $2. We got a target here of maybe $3. So let's go 6 days, 7 days, 6, 7 days. So I'm going to go back here, time frame, type in 7 days. So hopefully you guys are seeing that these sheets are kind of nice. Now it's really cool. Sorry about my little lines that I have here, but I'll get rid of those. What's really cool is once you have this down, everything over on the entry criteria becomes much easier. Now this is not just with the long calls, folks. As you progress through the courses, you'll find this becomes really nice to have when you're doing something like a butterfly spreader, a condor, multi-legs, ratio spreads, things that go everywhere. It's nice to have that base of, hey, I want to get in, I'm going to make $2 to the upside, and I'm going to risk myself, $1 to the downside or whatever it is. So if I get those numbers right, almost $3 to the upside and then about $1 or $2 to the downside. So, but I know where I'm going with this. So the next thing I need to do is check these off. I want to buy 3+ weeks of time past the target date. The first thing I'm going to talk to you guys about is that is not necessarily set in stone. Okay, strike price, delta greater than 60, open interest greater than 100, absolutely bid-ask spread near the bid-ask spread. It's got to be a tight spread. Usually, open interest will take care of that. So let me uncheck these and let's go find them one by one. I'm going to bring up a couple of different scenarios. And I think why I want to do this is because, hey, we've got a target of this thing about 7 days. So I'm going to go over to the trade, analyze tab, and let's take a look at some of the similar trades we have. I'm going to close this to see the dates. Now this has weekly expirations. So we're going to shoot 7 days, ideally would be April, right? So April could work. However, we want 2 to 3 weeks past that. So we're probably going to be more towards regular expiration of April or the 16th of April, giving it at least 2-3 weeks past our target point. But I want to compare both, okay? Both scenarios. So first, let's start with what we have. Let's see if I can get this down to 14. Our rules are we need a delta greater than 60. So let's take a look at our bid as probably. I got to switch this from. I got to change over to our delta view, and we'll go straight down the delta column and look for 60. Now the first one at 60 is $62.50. You can see that right here. And we can go a little cheaper, 53, or we can go a little deeper, 67. But I like that 61. So we're going to shoot for the 62.5 strike price. Now I'm going to go back to my last net change because I want to deal with how much it's going to cost us. We'll also, actually, let's check the open interest on our 62.5. Open interest of over 100, just barely, 108. All right, but it's there. All right, we'll stick with this view because it does have the bid and the ask. So the bid and the ask is about 9 cents away. So that is our first choice. I'm going to pull it out here. I'm just going to regular click over the ask, and it just puts it down there as a buy. Now I'm going to drop this down into 1 because we haven't even talked about how many I want to buy, but let's just analyze it as one contract for now. Looks like it's going to be $1.47. That being said, this is what I love about this platform. Let's go ahead and investigate the at expiration strike price. Now, folks, you're like, well, geez, Joe, what are you doing here? You shouldn't be. You need to buy that time because it's going to go to zero eventually. That's completely okay if you're saving yourself enough money by having that 60 delta. If this goes in a direction, you can get out of it in 2 days. You can get out of it all the way to the 7th day. It doesn't make a difference because you are going to be building intrinsic value. What the difference is you will find that I'm spending more money for that extra 3 weeks than I might need to by buying the expiration price, or I should say expiration date. So keep that in mind. Okay, so here it is. It's the 62.5, 409 open interest. It's completely fine. And I'll check the delta once again, but I'm pretty sure it should be at 60 at least. So the 62.5 is 70. So we have a stronger delta, right? It's it's about 50% cheaper. That's right, folks. It's 40 something cents, about 40 cents cheaper. That's a lot when it comes to that. And we have a bigger delta. Okay, see? So now you can see why we might want to investigate that. So I'm just going to go ahead and just click it to buy. And you'll see that I have them down here as single legs. That's fine because I'm going to analyze them individually. I have to keep things equal. I'm going to drop this bad boy down to 1. That's going to change when we go to buy our max gain, max loss, right, folks? Because with this option, I could purchase more contracts with the same risk. Another benefit. So keep that in mind. All right, so I've got the two things that I want to take a look at. Let's go back to the chart. They're both the 62.5, and they're both going to take advantage of a start to finish move around 7 days up to a target point. That could be 3 days, 8 days, whatever, so on and so forth. We're restricted in time when it comes to the shorter expiration cycle, aren't we? Let's go ahead and get to the analyze chart. I'm going to go to risk profile, and I'm going to deselect the shorter time frame. So right now we're looking at the risk graph for the longer time frame, the 16th of April. It's great, looks good, right? Our target of $66.50. I'm going to hold my cursor over there. You can see that if we were to hit that today, we can make somewhere around $260 at expiration, which we wouldn't be holding this till expiration, right, folks? Because it's the longer one, about $259. So let's do this over a series of day steps. Let's set this down to maybe about 3. I want expiration in there. Let's do 4. Okay. I'm going to zoom in a little bit just so we get all sorts of fun things in here. And you can see that, okay, well, our target here, guys, and I'm going to do this. I do this all the time when I teach these. Focus over here because we have a target date on this bad boy of what, 7 days? So 7 days from the 25th. Boy, is my math off. It's going to be the 30th, 31st, about the 2nd. So right around the 2nd or the 6th is where we're looking when it comes to the target expiration cycle. Now, I can be off by a few days choosing the longer expiration cycle, can't I? So I'm going to put my mouse over our target of 66.5, right up in here. I'm going to get close to it. Might not be exact. I think it was 66.40. Fine, I got it. Okay, so it's as close as I can get. You can see by the 2nd or the 6th of April, $240. Not too much change between the two, is there? You notice that? Not at all. I mean, you could hold this thing for an extra 4 days, and it's not going to change much because we've bought extra time. Now, break it down in your mind. It's risking $149 per contract to make about $240. Not bad. Okay, so let's take a look at the other choice. I'm going to deselect this, and I'm going to select the shorter term time frame. I'm going to have to decrease those days up here, folks, because the day steps, we only have 7 days, so we can't day step at 4 per. I hope you guys followed me on that. I still have it circled, right? Now I'm just going to go ahead and put my cursor over, what do we say, 66.40? All right, close to it as I can. All right, okay. So on the 29th, we would have $277 at expiration around the 2nd, $277. It didn't move much, did it? So the risk reward, the reward on this is about the same. It's about the same, and I did think there was going to be a lot more fluctuation, but then I took a look at the day steps here. They're only a day apart. However, we can make that 240, or I think it was, around the 240, risking $149, or we can make 270, roughly. Let me get back up here, about 270, 277, risking $112. Now I'm getting those numbers from here, guys. $149 for the longer term, $112 for the shorter term. Obviously, the best bang for the buck is the shorter term, 62.5. Where's the catch? Where's the catch, Joe? Here's the catch. Let's say that it gets to our target of 66 and change, right about here, and it continues higher. We do not have the ability to hold the week 1 April expiration any further, much at all. Maybe a day or two if we're lucky. It's going to expire and we're going to get shares. We have the ability to hold the longer term as long as we want. Well, within reason, right? So there's your trade-off. It costs a little bit more. The return, if it gets there in the same time, isn't as much. However, taking half profits, extending it, letting it go further. Maybe it goes from 66.40 we said to 70. That's an extra $3. You can do that with the longer term. So this is what's really cool. There is no correct answer. There is no correct answer on which is better. You guys know in the class that you just took, you do this over 100 trades, you'll find that they are about the same. It just depends on what you're more comfortable with. Paying that extra couple of bucks, and understand, folks, you're putting out, it looks like an extra 38 cents between these two that I have circled down here. But understand, you get that back. It's not like you're going to lose that 38 cents. If this thing hits it in 3 or 4 days, you'd sell both of them in 3 or 4 days, you're going to get the majority of that back. This circle over here is just showing the profit loss. That is excluding your starting cost. So, that's what you would make. Plus, you would get back whatever you paid for it. So keep that in mind as well. Kind of a couple of cool things to look at, isn't it? So long story short, you figure that out. Let's go back and then let's see if we can do any sort of a ratio when it comes to a benefit. And it's not going to be by much on being able to purchase more than sell. And let's go back to our cheat sheet here. Everything checked out here. We could buy 3 weeks at a time or not. Our strike prices worked out. Open interest was good. Bid-ask spread was cool. Let's go ahead and choose the 16th of April. And we're going to do, it's a 62.5 strikes because they were both the same. And we're going to do this because it's going to be able to, we'll be able to take half profits and hold it longer if we need to. Let's just start there. So the net cost on this, what we say, was $1.49. The quantity on this, geez, I can't do the math here, folks. Let me pull up my phone here. Let's say we're going to do $500 of risk. So I'm going to go 500 divided by 1.49, and that equals 3 contracts. So we could do 3 contracts. Now, just for fun, folks, let's see what the other one was. And I'm going to say it's not going to be by much. It probably will be 3 as well. $1.11. Okay, so let's do that. 500 divided by 1.1 is 1 equals 4 contracts. So we could buy one more contract. It was actually 4.5, but we can actually do one more contract with the other side. So at risk, it's going to be the full amount. We'll say, geez, what is that? 1.49. $447. Max gain was going to be that 447 plus the, what do we say, 240. Let's do this plus. Or well, I'll just put the max gain as 240. 240. Max loss is going to be 447, which is cost. All right. Now, if you wanted to with the max gain, folks, and I have traders do this, you could add the two together. I'm fine with that. So it'd be like $687. It looks good. That's fine. So time management wise, time management means, hey, if you want to, you can say I need to get rid of this just a week before expiration. Time management with straight calls and puts, folks, is usually never made. You're usually going to get stopped out or hit a target price and then just adjust past target if you take half profit, so on and so forth. And it's kind of funny. It's always nice to at least make a note. Time management, just say, I'm going to say exit before expiration. And that could be the day of or the day before or a week before, just whenever your target hits. Price, stop. I'm just going to do this. Stop target at expiration, close before. And we could do this. Other. This is fun. Take half at target. And protect rest. Remaining position. Hopefully I spelled this right. Sorry, folks. Position with stop. Now that stop could be adjusted on, a trailing stop. It could be adjusted day by day. Personally, folks, I like to adjust based on the previous candle as I move forward. All right, so let's take a look at what we have here. And not a bad little trade. You know, well, let me switch it back to the one we chose, which is the longer term. Let's go ahead and I'm going to right click on this. Let's just we'll go ahead and create that duplicate order and send it. Looks like it's going to be a little cheaper for us, $1.45, right? So I'm going to confirm it and send just for fun. See if we get it. But it's working. There we go. We got ourselves a little bit of trade. Now, folks, I did enter it immediately because I want to show you how to do it. Just right click and send it. Although I would have waited for it to get above the 63.5 to make sure we confirm. All right, folks, the lab a little bit longer than most. I like to keep these about 10-15 minutes. We're about 25. But I did really want to compare and contrast that, you guys can choose different expiration cycles. Just understand what you're giving up and what you're getting back for it. At the end of the day, there is no wrong choice. If this stock goes up to $66 in the time that we thought it would, or anywhere near that time, both situations would have been fine, right? You would have the ability to adjust the longer term position if you wanted to take half profits and see if this could get up to, previous resistance up here of 67, maybe even 68. With the shorter time frame, you got better leverage, a better return on investment, but you don't have the opportunity to kind of squeeze this out. All right, guys, thanks for joining me. I appreciate it. And we will talk to you next time. Reach out to us if you've got any other questions. Bye, everyone.